one in 2007. There was a mini SPAC boom in 2007, 8, 9. There are actually 90 of them done. For a variety of reasons, the structure made it a lot harder to work well for good companies. It's not worth getting into all the things that were in version 1.0, but a lot of them didn't work, frankly. Fortunately, and we started as a growth SPAC to invest in a growth business, and our board, a lot of names familiar, were Ted Leonsis, board and advisors, Ted Leonsis, Raul Fernandez, Jung Kim, Hugh Pinner. It was the DC tech media telecom mafia. Tom Wheeler, who became head of the FCC, just goes on and on, those kind of folks who were involved. But then the financial crisis hit in 2008, so a growth company wasn't the answer. And we actually saw an opportunity to create a new mortgage REIT because there was massive dislocation in the mortgage market. All the capital was leaving, none was coming in. Returns on underlying mortgage investments were really high just because you had a supply and demand imbalance for the investments. And we said, if we can stand up a public vehicle, it's going to have an unbelievable opportunity. It was really hard to get that deal done because the other thing I should mention is investors, get to approve the deal you do. And even if it's approved, if any investor doesn't like it, they, instead of saying, I'm going to roll my stock into the merger, they can say, give me my money back. So you've got to find something that people in majority approve, and secondly, that investors don't want their money back. So when you find a company, first you sell your track record to raise it, then you go sell whatever you're going to do. And that was a hard one, but we got it done. We started like $120 million. And we had an amazing team that we had met who was fantastic at investing in mortgages. And within 2 years, it had a $4 billion market cap. We raised $3 plus billion. Still today is the third biggest mortgage REIT. Its scope has massively broadened. And it was the second best of the 90 SPACs done in that window. But because most of them didn't work, SPACs kind of went away from 2009 to 2013. And so then in 2013, we were the third one back, raised a capital investment too. We invested in a company called Lindblad Expeditions. We take people on small ships to places like Arctic, Antarctica, an amazing company in partnership with National Geographic, located in DC. There's going to be a common thread here. Everything's going to have a DC nexus. And a lot of people, John Fahey had been chairman of National Geographic when they did the deal, and so we brought him on the board. So that's in a fantastic company, done great. Then 2 years later, we invest in a company called Cision, which is the dominant software provider for the PR communications industry. It is the platform everyone uses. Actually, one of the origins of that company was a company called Focus, which was a company based in, I think, Beltsville or Hyattsville, DC Nexus, but was a big deal. That was a $2.7 billion acquisition. And then the fourth one is an equipment rental company. We provide equipment for building out utility networks, telecom networks, rail. I'd have to stretch to come up with the DC nexus for that. I'm not sure there is one, but we're here. So that was it. And then we just raised in December Capital 5, as you said, with $345 million. And so the reason these have become so, it was there. The numbers are incredible. Like as I said, we were the third one in 2013 to raise capital too. I think there's been 60 SPACs raised in January this year. So it's completely different. And there's a lot of reasons for it to some extent. So why would someone go public this way or do this? It's a better way of going public than it's not for every company, but for a lot of companies, it's a better way of going public for a couple of key reasons. One, there's an idiosyncratic reason, but when you do it with us, or SPAC, you actually can show your projections to your new investors, and you can share more information than in a traditional IPO process. So especially these days where people need to explain how my business is impacted by COVID, don't value me on last year or even this year, look a year out. A traditional IPO process, you don't really get the information you need to be able to talk to people about your business. Frankly, I've been talking to people forever, this is how, your investors should get access to that information. They should be able to ask you about it. And so that's been a big reason for why they've become really popular now. And then you can get public quicker, so people want to get public quicker. You can raise more money. You get our sponsorship, which is usually really helpful, or our help. We really are involved in the companies. And so there's some real advantages to doing it this way. And JB, I think the thing that's the most interesting in what's happening right now is virtually every company that's not public is thinking about, should I explore the SPAC alternative? And why is that? Obviously, the transactions that are happening are performing really well, so they're being well received. But we're at an inflection point in so many industries coming out of COVID where I think you're going to, first of all, there's industries whose growth has either been catalyzed or created by COVID, work from home and Zoom that we're on, all that, stuff like that. But every industry is impacted. And I think coming out of it, there's going to be real winners and losers. And I've seen this movie before. At the end of the day, the winners will be the ones who have the best company and are best capitalized. If you're the best company, but you're not best capitalized, someone who's maybe not quite as good as you, but goes and gets public and raises a lot of money, and you don't, you could be left behind. Similarly, if you go public and you're not good, that's not good either. But the best ones are both. And CEOs and boards are seeing that I want to raise capital, I want to be public so I can be offensive coming out of COVID. And so everyone's interested in this. And because there have been a number of things that have worked well, like ours and a bunch of others, people are like, wow, this is a real path to transform my company that combines the best of being public and private equity, does it quickly at scale, and it's something I'm really interested in.
Yeah.